Good afternoon, everybody. Uneducated economist here. So I keep finding these articles saying that the Federal Reserve is late, that they're late to the game, that the idea that they are going to tame inflation with the rising of interest rates is now out of their control, and that we are headed into a hyperinflation scenario and a total market crash and recession, and all the bad things that could ever possibly come are coming, and it's all the Federal Reserve's fault. Yeah. Um, I tell you, it's really interesting to hear a lot of people's perspectives on this stuff, considering that a lot of what's happening right now was stated as part of their plan years ago. So to think that they have lost control doesn't really seem to fit. Not with the idea that they were going to let inflation run extra hot for extra long to make up for the fact that inflation was running under their 2% target for the last 10 years. So when they say years ahead of time that we are going to let inflation run hot for an extended period of time to make up for the fact that inflation has not hit that 2% target for the last 10 years. Now, when that statement was made 2 years ago, I was saying it then. If you haven't gotten inflation for the last 10 years, even after all the quantitative easing of 1, 2, 3, and all the other stuff that they did, how is it you're going to get inflation now? And then the pandemic hit. It's like, oh, okay. I see it now. I see what you got happening. But now everybody says the Fed has lost control. Like, the rising of interest rates is going to send us into a recession. Like, going to crash the markets. It's all the Fed's fault. Okay. Now, that's going to be probably true. We probably are going to head into a recession. Markets are probably going to turn down. But I really have to question, is it the Fed's fault? I mean, they're just a monetary policy maker. Right? They either make the cost of money expensive or they make it cheap. And right now, with everything going on, they want to make the cost of money expensive. And it's immediately having an impact on the markets. I mean, just like take a look at the link that I leave down in the description for you guys. Containers are getting cheaper to ship. Remember, this was something that was blowing people's mind, how expensive it was to ship a container from Asia to the United States. Well, that price is starting to come down. And if you look in there in the article and read the reasonings behind it, it's because the demand is coming down. Now, this is before the Federal Reserve started messing with their interest rates. I mean, this demand that was, waning, this was happening ahead of time, ahead of that idea. So it's not the Federal Reserve and the rising of interest rates that is slowing the consumer demand down. It was already slowing down. And they're raising the interest rates into the slowdown. And they're going to say, hey, look at the rising of interest rates has put a damper on the rising of inflation. That's what they're going to say. They're going to say, look, we're doing it right. We're doing the right job. But it was already taking place. You can see it right now. Just take a look at the freight. Take a look at trucking. Take a look at a lot of the distribution network that's out there and how it's starting to ease up. How things are becoming more available. Now, it's not great. It's not like a perfect distribution network taking place. In fact, it's still very complicated and very hard to move things throughout the nation, to distribute them in a efficient manner like it once was. But it's not getting harder. It's getting easier. And it has been for some time now. Something that I said for months back. I said retail is dying. It's coming, it's slowing down dramatically. I work retail for a living. I think I would know. If you ask anybody who works retail and they say that it is still incredibly busy out, like as busy as they have ever seen it, just give it some time. They're going to experience it too. It doesn't happen everywhere all at once. But there is plenty of people talking about how they are starting to see the slowdown. They are starting to experience it. They're seeing, real estate in their neighborhoods coming down. They're watching these interest rates rising, and they know that there's going to be people who are going to suffer the consequences from these having these higher interest rates. I mean, how many people do you know who have overextended themselves on credit? Buying new cars, buying that new house, taking the vacations, spending all that stimulus money instead of investing it. How many people do you know were like that? How many people do you know who were unemployed getting extended, extra unemployment benefits and just blew all the money? They didn't do anything about like saving it or investing it or doing something real with it, even though they were getting more on unemployment not doing anything than they did when they were working. But they didn't save that money. Well, I'm sure some of them did, but not everybody. Most people spent the money. Most people took out a lot of debt while the interest rates were really low. They took out the equity out of their homes. They bought these expensive cars that were in short supply, so the retail price of them went through the roof. I mean, this is what a lot of people ended up doing. And now with the interest rates rising, the cost of money is going to get very expensive. So borrowing going into the future is not going to be as frivolous as it once was. People are going to look at the payments on a car and they're going to be like, man, I can't really afford that anymore. I'm going to have to get a cheaper car or no car or start taking the bus. I mean, this is the type of feeling that a lot of people are going to end up taking on, because it's not going to get easier. It's going to get very hard. And this is something that I said was going to happen. I mean, back when the Federal Reserve first started to drop interest rates, they first started going into quantitative easing, I said it back then. I said, okay, when this all comes to an end and they start to raise rates again, and people said I was crazy. They said they are never going to raise rates again. It will never happen. It will cause too much turmoil. Well, I believe it will cause turmoil, and I believe for a lot of people it will be too much, but I am sure of it now that the Federal Reserve plans on raising rates. They plan on raising rates aggressively, and they plan on raising rates to the point that the inflation comes down to their 2% inflation average targeting, whatever that is. How long that takes, I have no idea. I don't think anybody really does. I don't even think the Fed does. But I do know that the Fed is just now starting on their monetary policy and the adjustment of their balance sheet and the rising of the Fed funds rate. That is just now starting taking place. It's impacting the markets immediately. But the real effect on the economy won't happen for another 6 months to a year down the road. So if you want to wait for the real pain to kick in, I mean, this is just the preliminary pain. This is the pain that the people are aware of. Wait till it really starts affecting the economy. Wait till people who have not been able to take out loans, people who are not able to roll their old debt into new debt, are then doing more for less. Meaning, like, they go to work, but they're paying off their debts. They're not buying new stuff. So you're working and you're not paying for anything, or you're not buying anything. Think about what this country is going to look like if that goes on for a year or so. People are not going to feel good about this. It's going to be a tough time going into the future. You can see it. Like, just look at the dollar increase. Look at the dollar strengthening. It's at like 103 on the dollar index. Look at gold. Gold didn't fall with the rest of the market. I mean, it came down a little bit, but gold is holding its own. You know why? It's because people are scared. And there's not just scared here in the United States. They're scared around the world. And now here in the United States, people might be scared of the dollar, feeling that the dollar is on its way out, losing value, going into hyperinflation. The rest of the world doesn't feel that way. And the rest of the world owes a lot of debt that is due in dollars. And they want to get a hold of those dollars at the same time that the Federal Reserve is trying to tighten up the monetary policy. If dollars are not the safe haven, the only other place to go to is gold. And that is the reason why gold is holding its own. It came down a little bit, but it is not dropping. It is not going to be dumped out so that people can get cash. That's the reason why the markets are falling. That's the reason why all the rest of the stuff is going to go down in price, like the markets, the real estate, used cars, new cars, all this stuff. You're going to find that it's going to go from very expensive to unbelievably cheap The only problem is you won't be able to get a loan for it. And if you do take out a loan for it, the interest rate that you pay is going to be so high that you're probably not going to buy the car anyway. This is the type of scenario that we're coming into. So if there is no safe place to go to and there's no safe asset, you have one of two places: either cash, the US dollar, or gold. And I feel that's probably going to be the case for the next couple of years. I mean, I don't know how long it's going to take for the Fed to max out on their Fed funds. They say that they want to take it up to 2.5%. Some economists say all the way up to 3 or 4, even 5%, maybe even higher. I don't think they're going to get much beyond 1.5 to 2% before they are restricting the economy so much that they will have no other choice but to reverse course and start dropping interest rates again. I mean, this is the way I see it going down. Anyway, kind of the same topics that we've been covering, but I just keep seeing these articles popping up, and I keep seeing like a lot of videos talking about how the Federal Reserve has just lost control, and I don't see it. I think that they put us right where they want us, and man, are we going to feel some pain from this. I don't think it was a mistake. I don't think that they have lost control. I think this is all very organized and going to plan, because this is exactly what they said that they were going to do. No deviation to the plan whatsoever, not that I see. All right, I'm going to leave it at that. Uneducated economist. You guys let me know.